For years, people would ask me, so when should I buy? And I would give them technical explanations of, you could wait until it comes back to the 200-day moving average and make a purchase and so on. And then a few years ago, my business partner pointed out to me that what they were really asking is, how long can I wait before I have to buy? Can I, tell me when the markets are going to crash and then I will buy. But for now, I want to remain invested in what Kramer tells me to invest in. And people waiting to get things like emergency food or precious metals, when they're absolutely necessary, when you really need them, they're just not going to be available.
No, they're not. And I think, according to the estimate I looked at, I forgot the name of the company that put together this report. It is 2005, so it's a year, at least a year and a half old. But real estate globally was 217 trillion. Bonds were 94 trillion. Equities, stocks were 55, and all the gold and silver that you can get your hands on. Now, this is not jewelry. This is investable central bank, private gold and silver was 3.1 trillion.
Wow.
So it's less than 1%, which is 1%, and that's where we see this gold and silver. If people, it was doubled to 2%, it would totally overwhelm the market because there's just not the silver and gold there. And I came across this very interesting statistic: the U.S. deficits. Government account, there are deficits for 5 years from 2011 to 2015, added up to be like 4.6 trillion, our deficit. Well, if you get all the gold and silver produced in the last 30 years, our 5 years worth of deficits would have paid for all the gold and silver produced in the last 30 years. That just goes to show you how out of whack everything is. And so, yeah, unfortunately, I think, according to my statistics, there's about 3.2 billion ounces of gold and about 2.2 billion ounces of gold, and that's all of it, and about 2.5 billion ounces of silver. More could come on the market, but we can see there it's about the same. It's not 10 times more silver. It's about the same. So when we start seeing private institutions, private investors, and retail investors moving in, you're right. There's just not enough silver to go around, which makes the price move up very high. And yeah, I'm frustrated to hear people are selling, or if they're selling their metals now. It is so frustrating. If I didn't have this energy understanding, Mike, this is the reason why I hold on to my metals. I know it's a guarantee. There's no guarantee of where the price will go or the value, but to me, there's a guarantee that they are the go-to assets. So it's just a matter of being patient and going against the flow of the public. The public's very fickle.
Yeah, I've been dollar cost averaging, just accumulating every month. And I first started buying gold in 2002 when it was about $315 spot. And in April of 2003, I found silver, and I started buying at $4.30 roughly. And I accumulate every month since. And then when there's a big dip, I'll make an extra purchase. And I sort of follow the commitment of traders on that. But, you wrote an article recently about declining production in the precious metals. The last one you wrote was about Peru's silver production. But production is down, and with the price down where it's been at for the past 5 years, it's been falling. And what the producers do is the first thing that they cut as far as their expenses is exploration. And one of the big things about silver is that the vast majority of silver supply comes as a byproduct of other metals. And so that means when the real estate bubble in China pops, when the markets start crashing, just when everybody wants silver, most of the production will be going away. Can you speak to that a little bit?
Yeah, I agree. I'm a little bit more out there than, let's say, the mainstream or the other precious metal analysts looking at a slower decline in silver production. I think David Morgan says, according to what he's been looking at, that we may actually see a blip up. And of course, there's new. Mexico is still adding, like Fresnillo is still adding some new mines. So we could see building of primary silver. The biggest problem, it's not primary silver production, additions of primary. The biggest problem, as you mentioned, is the base metal. Copper, zinc, and lead account for 56% of silver, byproduct silver supply in the world. And gold comes in at 13, and then silver is like 30%, plus or minus 31%, something like that. So the majority of silver comes from zinc, lead, and copper. Now, when these crazy markets really crack, and we start seeing this massive debt in China start to implode. These indexes really start going down to where they're supposed to be real valuations. That means we're going to see a huge decline in economic activity. It has to happen because everything is leveraged so much now.
Right, and copper is used in plumbing, and zinc and lead is used in automobile manufacturing. And so when this economic disaster happens, what's going to be the result?
We're going to see prices of the base metals fall, and then we're going to see much more gutting of the base metal mining industry. It's coming. And I said it's based upon the energy. The energy is really starting to hurt the system, and so using debt to offset this falling energy is becoming unsustainable. And so it finally gives way. The leverage finally implodes on itself, and then it starts pulling down. It's like the Titanic. It starts pulling it down. It's sinking it. And so we're going to see copper, lead, and zinc production decline significantly. I don't think gold will. It could a little bit, but I don't think gold will in the beginning as much as the base metals. And so we will start seeing a decline of silver production, even if the price of silver really jumps, and we see maybe some of these primary miners adding more, bringing some of their mothballed mines or other mines that were questionable. We could see increases of primary, but it won't offset the decreases coming from the base metal mining industry. So yes, and then according to my analysis, within 5 to 10 years, I think we're going to really see a real gutting of the oil industry. And without oil, you can't run these mines. They don't run on electricity. They can't. They just not function that way. And we haven't transitioned to anything quick enough. So when the oil becomes problematic, the supply to these base metal mines, the energy, is going to start to fall too. So yeah, Mike, I agree with you. Just when people want to get into the metal, silver, especially silver, the supply is really going to start to fall. And this is going to be like the worst of both worlds, really. Declining production and an increasing price. It sounds so counterintuitive, but it's been 50 years in the making.
Yeah. So I think with that, we're going to end this interview. And I thank you so much, Steve, for being here and giving your insights. And you can visit Steve's website at srsroccoreport.com. That's srsroccoreport.com. It's a wealth of information. He's a great analyst. There's some very unique takes on the economy and what lies in our future. So thanks, Steve, and we'll see you next time.
Thanks, Mike.